John, how big is this quarter going to be?
Well, I'm sure the president will probably be happy. It'll be 4% plus. We actually have 4.7.
Wow.
But the consumer business investment's pretty solid. But what we're really focused on, Brian, is that underlying trend, what we call real final sales to the economy, should be about 3%. The reason you get the 4.7 basically is the huge increase in exports to beat the trade deadlines or trade concerns and the increase in inventory. That's not sustainable. And in fact, trade will probably subtract a little bit from GDP going forward. But I would focus on that real final sales number. Should be about 3%. That's your sustainable economic growth.
Well, good point, John. We are in the third quarter right now. So if we get 4.7, is that going to be the peak because of that channel stuffing or cargo stuffing almost, if you will? Or is this a sustainable, are we going to get sustainable 4% growth for quarters to come?
No, I think this is a one-off kind of situation, Brian. I think trade will subtract from GDP for the rest of the year. Much more sustainable will be about 3%, 3.25% for this year and the first half of next year. But after that, Brian, you know the same old story. Productivity and labor force participation rate dictates that the longer run trend is more like 2.5% for the U.S. economy.
Okay, so what is the number inside the number? Obviously, the headline number, the 4, whatever, that we're kind of joking around about is key. But there's a lot of stuff inside that number that folks like you dig into. What are you going to be looking at? One or two things that are kind of the guts of the number?
The guts of the number is what's happening with consumer spending and business investment. Because if the tax package really has some type of impact for this year and the first half of next year, it's got to show up in the consumer and business investment number. That's that real final sales plus government spending. That's what really has to come in around 3%, 3.25%.
Okay, and so what are you looking for the full year then? And how would that impact the bond market? Are we going to get a 3% yield for the 10-year by the end of this year?
Yeah, you probably will get the 3% yield by the end of the year. Part of it, of course, is economic growth has picked up to about 3%. Inflation continues to drift up, and we expect the Fed will again raise interest rates in September. So you will get the 3% 10-year yield by the end of the year.
Does it impact what the Fed does?
Oh, yeah, absolutely. I mean, this is one of the funny situations where, you're looking for, the boom today and you get September's rate increase. But as that economy shows signs of slowing, the Fed may or may not increase the interest rates in December. Plus, we really do need, Brian, some resolution on the trade situation. That just creates a lot of volatility and a lot of uncertainty for the Fed.
Yeah, I mean, if we get this 4.7 number, you said maybe a one-off here, does that make the Fed have to be more aggressive? Do you think we get maybe a third or a fourth extra rate hike this year, John?
No, I think the Fed, like most private economists, would see right through this and say 4.7%, 4% is not sustainable. It's a lot of trade, a lot of inventory. That'll be corrected in the third and fourth quarter when those numbers come out. And what we're looking at is more like a 3% pace of growth. And then the Fed really depends upon where the inflation numbers are going.